Ladies and gentlemen, good day and welcome to the Tube Investments Q2 FY24 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anupam Gupta from IIFL Securities Limited. Over to you, sir.
Yeah, thanks, Enzo. And welcome everyone to Tube Investments second quarter FY24 results conference call. From the management, we have Mr. Vellayan Subbiah, Executive Vice Chairman at TI, Mr. Arun Murugappan, Chairman at TI, Mr. Mukesh Ahuja, Managing Director, Mr. Mayappan, Chief Financial Officer, Mr. K.R. Srinivasan, President and Whole-Time Director for Metal Forms Product Business, Mr. Murali, President at Tube Products India, Mr. U. Rajagopal, Senior VP at TI Cycles, Mr. N. Govindarajan, CEO for 3X for Innoventure Limited, and Mr. K.K. Paul, President of TI Cycles. To start off, I'll hand it over to Mr. Subbiah for the opening remarks, post which we'll have the question and answers. Over to you, sir.
Anupam, thanks so much, and good morning, everybody. So I'll just go through the results quickly. In terms of standalone results for the quarter, the revenue was at 1,970 crores, as against 1,906 crores in the same period for the previous year. The PBT before exceptional items and tax was 245 crores, as against 226 in the same period previous year. And the ROIC annualized was at 67% as against 62% in the same period. Free cash flow for the quarter was 108 crores. I'll just go through a quick review of the businesses. In engineering, the revenue was at 1,274 compared to 1,192. And the PBIT was 169 as against 165 in the corresponding quarter. Metal Form revenue was at 400 compared with 371 in the corresponding quarter, and PBIT was 53 crores for the quarter compared to 48. The mobility business, the revenue for the quarter, this is a bicycle business, was 177 crores compared with 226 in the corresponding quarter, and the loss was 3 crores as against a profit of 10 crores. That business is going through a bit of a slump in terms of demand. Other businesses were at 207 crores compared with 188, and PBIT was 17 compared to 8 in the corresponding quarter of the previous year. In terms of consolidated results, our consolidated revenue for the quarter was 4,306 as against 3,767 in the corresponding quarter. And the profit before the share of profit of an associate joint venture exceptional items and tax for the quarter was 493 as against 435 in the corresponding quarter of the previous year. CG Power and Industrial Solutions, a subsidiary in which the company holds a 58.05% stake, registered a consolidated revenue of rupees 2,002 crores during the quarter as against 1,675 in the corresponding quarter of the previous year. And PBT before exceptional items for the quarter was 303 as against 237 in the corresponding quarter of the previous year. Shanti Gears, in which the company holds a 70.47% stake, registered a revenue of 135 crores for the quarter as against 109 in the corresponding, and PBT was 30 as against 23 in the corresponding quarter. Commenting on the results, Mr. M.A.M. Arunachalam, Chairman of TI, said that the company displayed strong performance in a challenging business environment, sustaining growth in profits and profitability. The bicycle industry continues to suffer from contraction in demand, and our bicycle business continues its cost reduction initiatives and improving operational efficiency through Kaizen. Despite muted performance from the bicycle business, the company registered a 27% growth in PAT, with strong performance from engineering and metal form product divisions. The performance of our subsidiaries, CG Power and Shanti, has also been very encouraging in both strong top line and bottom line growth. And I think broadly, just to give you a sense on revenues, there is also a movement because of lower steel prices compared to the same period last year. So let me stop with that, and I'd be happy to take questions from the audience, and as will all the rest of us on our team. Thank you.
Thank you so much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jinesh Gandhi from MOFSL. Please go ahead.
Hi, sir. Congrats on good numbers. Quickly, you indicated about the impact of steel prices and other commodity prices impacting revenue growth. So any sense on how volumes would have grown for both engineering and metal form business?
Yeah, Mukesh, do you just want to answer that?
Yes, the total volume growth is about 13 to 14% in engineering and MSCD systems.
Sorry, engineering is 13 and 14% volume growth?
Both put together, weighted average, we are saying 13 to 14% there is a growth in the volumes put together.
Okay, for both the businesses. Got it. And particularly for engineering business, we were seeing some challenges in exports till last quarter. Is export business now stabilizing? There were some signs of recovery in previous quarter as well. Are you seeing sustenance of those factors? Has export started to grow or not yet?
Yes, compared to previous quarter, exports has grown. And we see that the period is going in to see the improvement in coming quarters also.
Okay. When you say previous quarter, on QOQ basis, exports have grown?
Yes.
And YY, would it still be lower because last year base was high, so that would have declined still on YY basis, right?
Yes.
Okay. Got it. And lastly, before I fall back in queue, on the electric three-wheeler side, we are yet to see material ramp up in our supplies. We are still doing about 200 units a month. Any sense on how do we see this ramping up, where we are in terms of, what are the challenges today, given that we broadly are in 3 states as things stand? Is it production side issue, or we are just waiting for proper feedback from the ground before we start ramping up our production? Can you throw more light on that, please?
Yeah, things have been. Paul, would you like to answer, and I can kind of.
Yeah, I think on the electric three-wheeler side, month on month we are improving our volume. This month also we will be better off than the previous month. Cumulatively, we are actually doubling up the volume each month. That's what's happening now. There are challenges in the supply chain that we are ironing out, and the order book that we currently have is for a month and a half, and we are expanding our dealer network. So all in all, we should be doing better and better in the coming quarters.
Okay. And we are still in 3 states, right? Yet to expand beyond the 3 southern states.
No, we have now actually expanded in North. So we had dealership openings in Kanpur, Dehradun, Delhi, and I think Lucknow is what we are opening. And we started some supplies to North as well. So gradually we are expanding. By the end of the year, we should have a dealer strength of around 72 to 73 numbers against the current 42.
Sorry, against current, you said is 40?
Current 42 numbers.
42. Got it. Great. Thanks. I'll fall back in queue.
Thank you so much. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Rushabh from RBSA Investment Managers. Please go ahead.
Yeah, hi sir, good morning. So just wanted to understand, as per your estimates, what could be the adoption levels for EVs as a percentage of industry across, say, three-wheelers, HCV and tractors, say, at the end of 3 years from now?
I think it's very difficult to make predictions, and we don't want to be in that business either. We obviously, I think the broad data that most people have seen is kind of on the overall global prediction. Twice they've already been revised upward in terms of EV adoption. And, we continue to be very bullish about, potential in India. But obviously we don't want to kind of predict any specific numbers. We're obviously overall very bullish on the levels of adoption that we think are going to happen in this.
Okay. And so, secondly, just a clarification. We understand that the new businesses in the TI2 bucket would have a 40 to 50% success rate. And so would the success rate be sufficient so that the company on an overall basis achieves the, say 20% plus profit CAGR over the decades?
Yes, definitely. I mean, I think that definitely. I mean, I think the success rate will be a bit higher than that, but definitely, even with that success rate, we will hit the profit CAGR that we're targeting.
Okay. And just the last question from my side. Is any potential sector or identified any target company in the Tier 3 bucket? Since it's been almost 3 years since we acquired CG now. Is just checking if there's anything?
No, as we've said, we continue to monitor different targets, but right now valuations on most things are very high, and we've been very clear that we don't want to overpay or even kind of pay for any assets that are kind of that are not. We prefer third quartile assets basically, right? And so we don't see too many assets in a reasonable valuation range right now for TI3.
And just last question from my side. Since we are expanding in the out of southern markets right now, any specific strategy that we have to pursue differently getting out of the southern market, since we have a certain home advantage there on the say brand building or distribution side, or the strategy is the same across markets?
Hello, Mr. Rushabh. I'm really sorry to interrupt here. Could you just hold on to your question for a moment, because the chairman, Mr. Arun Murugappan, has been disconnected.
Okay,
sure. Get him connected. Ladies and gentlemen, please stay on the line while I get the chairman connected.
Yeah, but anyway, we can continue. I think. Hello, can you hear me, Rushabh?
Yeah, yes.
Okay. Yeah. So I think as far as you're asking if for three-wheeler we're taking a different strategy in the north. Is that your question?
Yeah, three-wheeler and tractor, general basis, both.
For EV in general, right?
Yes.
So, Paul, do you want to just take your answer?
Ladies and gentlemen, I've got Mr. Arun Murugappan, the chairman, connected. You may please continue.
Yeah.
So by and large, overall branding strategy, etc., will remain quite consistent in the way that we are building the brand. But in terms of tactically how many dealers to have, where to have, that would be different for different segments. For the tractor, the first launch will be with 27 horsepower. So we look at the selective markets that account for large shares of that range, and therefore launch the products in those markets actually. So that's how it would pan out as we move forward.
Okay, thank you so much.
Thank you.
Thank you so much. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Sundar from Avendus Spark. Please go ahead, sir.
Hi. Thanks for the opportunity. My first question is for Mr. Mukesh. So one clarification here is that we've grown at about 13-14% in terms of volume, while the underlying category growth specific to two-wheelers and PV is not being to this number. So what's really led to this outperformance in terms of volume growth for us?
I agree with you. The two-wheeler is not growing, but if we see passenger vehicles has done pretty good, as well as commercial vehicle industry, and the three-wheeler also is having a pretty good strong growth, as well as our focus on the non-auto segment as well as exports has led to this growth of around 13%.
So would you be comfortable in quantifying the export percentage, sir?
As of now, it is hovering around 14%.
Okay, but this would be very similar to what we had in FY23, so 14-15%.
The overall pie is growing, and domestic market, what I said in non-auto as well as commercial vehicle and PV are pretty strong. So that's why growth percentage of the exports pie is also maintained.
And anything to add on the railway segment, sir?
Railway is yet to pick up. We are also working on our capability building things, and we see coming quarters we should be able to do better in railways.
Sir, one other bookkeeping question in terms of steel price pass-through. You indicated a couple of quarters back that's due for another 2 quarters. Is that complete price pass-through done with?
Please come again.
Steel price pass-through, sir. Should we assume that the complete price pass-through is done with? Is over?
So we don't know. Maybe let's say like Vellayan said that we don't predict what is going to happen to the price, but we have an arrangement with our all OEMs and the customers on back to it, whether if there is an increase or decrease scenario, we are able to settle with our customers accordingly.
Right, sir. Fair enough. And just one other point that I want to throw to Mr. Vellayan, a question out here is from a larger scheme of things, specifically on the EV HCV segment. Because there were a few news articles that had mentioned that there was an order book of about 1,000 crores on the HCV segment, which was about a couple of years ago. So what's really happened on the HCV segment? Would you be comfortable in quantifying in terms of our revenues, how much is three-wheelers, how much is HCV? Any color there, sir?
Yeah, so the HCV, so just to give you a perspective, when the order book that you're talking about was kind of, when they were predominantly being pitched in an OPEX mode, right? Basically being sold in an OPEX mode. Whereas we have moved it to a construct where we have a strong preference to sell them and are only selling them right now in a CapEx mode, right? Which basically somebody pays for the entire asset up front. We have, so the process, and the second thing we've done is kind of spend a lot of time re-engineering the product as well. We have started shipping the product the last quarter, and volumes have just started ramping up. So, basically it'll take at least a couple of quarters because first customers want to trial the product. So in a CapEx mode, the sales cycle tends to be longer because first customers want to trial the product, then they buy 1 or 2 of them, and when they start working well for them is when they start scaling up their buy. And so we basically changed both the sales process and the product there, and it's just starting to ramp up in the new structure.
All right, so just a continuation to that, interestingly, the last annual report you had mentioned that you would be also exploring the other models, but have you finalized that's going to be only on the CapEx model?
Yeah, we're initially going to sell them in the CapEx model. That is correct.
Right, sir. Fair enough. And one last question from my side is that on the EV, obviously there is another pending investment that you're looking for about another 1,000 crores by March of 2024. Any progress that you would like to share on that front, sir?
What you said?
On the TICMPL side,
right.
We were due for about another 1,000 crores of investment by March 2024. From external investors is what you were targeting on that overall investment.
We're in the process of a raise in that segment. So we are going. Right. We're in the middle of a raising process.
A bit cheeky here, but is there going to be valuations? How was it looking from the previous round of increases?
So we obviously can't comment on something that's in process, but at that point we'd indicated how we would go about it, and we have not veered from that. We're still taking the same approach we've indicated there.
Perfect, sir. Thank you and all the best, sir.
Thank you.
Thank you. The next question is from the line of Vipul Kumar Shah from Submangal Investment. Please go ahead.
Hi, sir. Thanks for the opportunity. So, can you comment on the progress of our EV tractor and this EV heavy-duty truck? So, what is the progress? What is the sales volume? and what type of capex we are looking for these two divisions?
So I just talked about the EV heavy-duty truck, so I don't think I have to repeat that. I just kind of answered the question on the heavy-duty truck. On the tractor, we have said and we continue to maintain that we'll basically get it homologated in the first quarter next year, and then basically, it will start selling. So homologated in the first calendar quarter, and then we'll start selling it in the first fiscal quarter. So January, February, March is when we will submit the first model, which is a 27 horsepower equivalent, for homologation, and then it will go into start of production in April, May, June.
And so directionally, if for a few quarters or we will see EBITDA losses increasing as the sales volume increases in all three EV products, sir?
Yes, that is correct.
That is correct. Okay.
You're talking about standalone or consolidated? Obviously, that doesn't come in the standalone numbers. It's part of the consolidated.
Yeah, consolidated only. Yeah. Okay, and sir, we are investing in.
Sense on EBITDA losses. So we don't think that they will increase significantly. They're kind of more or less steady state, and we maintain them at steady state at where we're at. So because once we have the and so with more and more of the plant build-outs done, right? So basically, most of the plant build-outs are done with the exception of the small commercial vehicle. So once the plant build-outs are done, the product should be more or less steady state in terms of where our EBITDA losses are.
So this quarter's EBITDA losses should be taken as a baseline?
This quarter is...
yeah, it is around 52 crores, if I remember correctly, for EV products.
Yeah, so I mean, if you leave capex and some of the other things out of it, obviously, which won't kind of flow into EBITDA, directionally, I believe that's correct. Yeah.
And sir, lastly, we are investing in so many initiatives from CDMO to EVs, and so don't you think even if all initiatives succeed, TI will be a holding company, and generally market gives a substantial discount of 50 to 70% to the holding company. So your thoughts, please, on this particular aspect of regarding valuation of TI.
Yeah, so we've discussed this idea on kind of capital structure before. So what we have said is that, first let kind of the businesses grow, right? So I mean, there are two things, right? Which is, one is we're first more focused more on business growth than on valuation. So first we want to focus on getting the business growth story right. And then we'll think about capital structure after that, right? But I don't think it makes sense to optimize only for capital structure, because first we have to be focused a bit on business growth.
Okay, sir. Thank you and all the best.
Yeah. Thank you.
Thank you so much. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Abhishek Ghosh from DSP. Please go ahead.
Hi, sir. Thank you so much for the opportunity. So my first question is for the engineering division. Now, that's a division that used to be earlier very heavy on two-wheelers, and as an industry, we have seen that, growth in underlying two-wheelers has been fairly muted. So given the diversification that you have done in terms of exports, non-auto and other things, what is the, growth rate that one should assume on a sustainable basis from this division, given the diversification that you have done? Sir, any thoughts?
So as we indicated in the last call, maybe we can assume a growth rate of going forward for 3 to 5 years, about 12 to 15% in increase.
Okay. Are there any scope of market share gains here, or does that still exist, or have we kind of our market shares are fairly elevated here? Any thoughts?
No, we are continuously working on that. Even this quarter also, there are some gain in shares, which is reflecting in the total volume growth. So wherever the opportunities are there for the new product development and EV participation, this division is pretty well participating in that, and we continue to work on that.
Okay. Okay. So we've also seen a healthy margin improvement in the current quarter. Is that because of mix, or is it because of operating leverage or the cost initiatives? Any thoughts on the same?
So it's a combination of 3-4 things, like we indicated earlier. We are working on the Kaizen initiatives, which is maybe adding to the operating efficiency. Also, product mix with a continuous focus and participating new initiatives like lightweighting, which is emerging out of the EV industry, and the exports focus content, which is where margins are much better. So it's a combination of 3-4 things. It's not one lever is giving results, and we are focused on all 4 sides.
Okay. Okay. That's very helpful. So just coming to the metal form division, you spoke about railways still hasn't kind of picked up, but there were some tenders which are supposed to be ordered out. Any update on that, and how should one look at the outlook on that? Because railways overall, we are seeing an improvement in the overall capex cycle. So how should we look at this aspect?
So like your observation is right, railways has released the tenders, and now we are participating on those tenders. In coming quarters, we see that railway revenue should grow.
Okay. Okay. And have we added any new client as far as the door frame part of the business is concerned? Any new client addition that has been done in that?
KRS, you will take this.
Yeah. As far as door frame is concerned, we are likely to participate in the Western region project of Hyundai, which has already been published in the media. So we'll be actively participating in that. That's a new project.
Okay. Okay. Yeah. That's helpful. And just about on the EV part of it, you mentioned about some supply chain challenges. Has that got resolved? What are the learnings? How we are implementing? Some thoughts there will be helpful.
I think it's this Paul here. I think it is getting resolved. We are working very closely with the concerned vendors to get the QCD in place. So our central quality R&D and the business people, they are all working together along with the vendor to see that the QCD is met, and we are making substantial progress. And the cost, what was there in the end of first quarter versus the cost at the end of second quarter in terms of the material cost is coming down. And we have a clear roadmap to get there because we have individual contribution targets for the different products, and we are working on a very focused manner now in terms of getting that organized.
Okay. Okay. So you don't think that can be a constraint for the ramp up of the monthly volumes that you are doing? You think that should get resolved over a period of next couple of quarters, given the kind of work that you're doing with the vendors?
Monthly volumes also we are adjusting to that. That's number one. Number two, as I told you, at least in the three-wheeler where we are ramping up now, we are able to ramp up the volume significantly month on month. In terms of this. So that gives us the confidence that we will overcome this challenge in relation to the plan that we are making. That's number one. Taking on from these learnings, we are working proactively on the tractor bill of material, for the variants that Mr. Ryan talked about that we'll be launching, so that, we at the launch time, we are having a matched BOM cost to the selling price. That's how I've answered you.
Yes, sir. Thank you so much for answering in such a detailed manner. So just one last question from my side is, if you look at your broad cash flow, you're generating almost about 300-400 crores of cash flow in the first half. So broadly, annual cash flow will be of 700 to 800 crores. How should one look at the allocation there in terms of capex and any other things? If you can just broadly articulate that, that will be helpful. Thanks.
See, I think we've talked about this also a bit in the past, which is we've announced the expansion for engineering, and that will come into the cash flows and kind of the usage of cash this year. See, broadly, we're going to use it for, right now it's getting, used more for TI1 and TI2 opportunities. And that's the focus right now. And, which opportunities we target it at is going to be based on where we see the best return options and strategically the sectors we want to be in as we take a longer term horizon to it. Right, and I think that this is fundamental to what I would call this reshaping of TI, where we said we wanted to diversify away from being an auto supplier. So I think that if you're asking for specifically where will we deploy that cash, I think it'll vary. We have a list of pipeline opportunities that we have as potential areas where we want to deploy the cash, and we constantly keep evaluating based on the best options, which are both driven by financial returns and strategic movement in terms of where we want to move the company in the future.
Okay. So would it be fair to assume that TI1, 2 will broadly consume about 300-400 crores of annual capex? Would that be a fair assumption?
No, it could be. It could be even more. No.
Okay. And sir, one of the areas you had mentioned where we are seeing a lot of traction in terms of the overall electronics manufacturing or the mobile related the mobile related value addition. Any progress, because we are hearing a lot of these localization happening, a lot of the development there. So any thoughts on that, sir?
Yeah, we continue to focus on it. But we continue to explore and are identifying what we think will be the right first step to take in that segment. And when we're ready, we basically will come out and talk about and discuss it once we have something finalized.
Great. Thank you so much, and wish you all the best, sir. Thank you so much.
Thank you.
Thank you so much. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Mr. Anupam Gupta from IIFL. Over to you, sir.
Yeah. So firstly, if you can talk about the optic lens business, any update on that in terms of ramp up or what's happening from the client side, that would help.
Yes, Anupam, we've got product approval from the first customer, and now we're still in midst of discussions with them in terms of what volumes they can take and pricing. And once we have that finalized, we'll start manufacturing for them.
So let's say if we look at this possibly in terms of the existing capacity which you have and possible customer additions beyond the first one also, what sort of, let's say if we look at 2-3 year horizon, what sort of contribution can this business have to TI?
No, if it scales, what we said was kind of what we had built was, a fairly low capex investment at that point in time. So if it starts scaling, we will have to invest more in it. So that's why I don't want to comment on it first till we have a successful customer. So I don't want to get into any of that till we first show customer success and product success.
Okay, understand. And sir, on your other initiatives which you had taken earlier, so the truck bodybuilding or the TMT, any thought of, so since those are not scaling, I assume, based on whatever we understand, what is the thought process on those businesses and how do you take a call on what to do with those?
Yeah, so definitely what we will do is those businesses we will evaluate. My sense is by the end of this year we will have kind of a final answer on what we're going to do with them. We will come back to that.
Okay, fine. And if you can talk a bit more about the Lotus and the CDMO businesses. So CDMO, I understand you are in the process of setting up the plant, but I understand you would be also talking to the customers. So if you can just give some picture on what's happening on CDMO and then also on the plan for Lotus.
So Mukesh, is Dinesh also on the call? So CDMO, I will have Govind give you a quick update. And is Dinesh also on the call? If not, in case one of us can give an update on Lotus. So first, maybe Govind, you can just give a quick update on where we are on CDMO.
Sure. I think the lab is getting ready, and in fact we have applied for the consent to operate, and that should accrue in the next week or so, like a week or maximum 10 days, 10 working days, and then we should be able to commission the lab. The objective was to first start the FT business. Already the customer meetings are on. I think as we are speaking, our business development folks are in the market, and we also paid for a 25-acre plot in Naidupet, and we have got the confirmation letter, and we are waiting for the allotment letter. We already finalized the engineering consultant, and once the allotment letter is there, we'll be ready to move in with the project team and start the construction. So that's the plan as of now.
Okay. And any specific, so you said 80, but any specific niches that you are targeting, or how do you look at beyond once you start the plant?
So the strategy here is to ensure that we would be doing both the contract manufacturing as well as a certain percentage of the business will also do certain APIs. And we are also introducing certain degrees of differentiation by introducing platform technologies. We already tied up with a player on continuous process for pharmaceutical products, and we've also signed an MOU for enzyme biocatalysis and enzymatic process. So these platforms would be utilized for both positioning ourselves and getting contract manufacturing, as well as we would pick up certain traditional APIs and make it more cost effective using these platforms to go to the market. So that's the plan. And the product development would start as soon as the lab or the permits are obtained, and we are starting the lab.
Okay. And just one last thing on CDMO, what sort of employee base you have created at this point of time?
The lab would house around 120 to 130 people at the peak. At this juncture, we are having around 15, 16 people who are already on board. And once the lab gets commissioned, as the business progresses, we'll be increasing those strengths as far as the lab is concerned. The plant, as we progress with the construction, will increase the manpower as we move towards the commissioning aspects.
Sure. That's helpful, sir.
Thank you.
Yeah, and from coming to the Lotus, as you are aware, we said in the earlier call, purpose of acquiring these businesses, we can increase the share of business in Indian markets, followed by we'll be concentrating on the export markets. And Dinesh and team are fully focused on how we can do more penetration on the supplying to more nursing homes and do the penetrations of more geography in India. That work is on, and last quarter was pretty good. We've grown almost close to 30% plus compared to the last quarter. And this work will continue, and we are also thinking to do some backward integration to increase the operating margins going forward. That answers your question.
And we've also seen an improvement already in operating margins, both in operating margins and in revenue.
So Q on Q, it's not visible in the numbers per se, because if you look at the numbers, it actually Q on Q, the revenues appear to be flat if I take the 10th May sort of acquisition date, and margins are actually looking down Q on Q. So that's why what's happening there and what's the plan?
Only 2 months in the last quarter. Because it is 2 months only in the quarter after acquisition.
Yeah, so that's why. So once you adjust for that, it appears to be flat. That's what this thing was. But that's fine. Just one last question of Lotus. Will you need to do capex there again for expanding capacity to cater to the market which you are talking about?
For doing, Valen, you want to go first?
Go ahead, please.
So for doing current volume and the market penetration, we don't need any capex. But however, we want to take care of the total supply chain. In that, we'll be doing some capex in coming quarters.
Okay. And so just one question on the cycles business. So this obviously is struggling given the weak demand domestically. And earlier you had talked about the export opportunity if you are able to get your cost down. So what's the progress on the cycles business at this point of time, and how will you? So I understand it's a cash positive business, but still, what's the call on a very longer term basis?
So our focus, basically that whole business now needs to get reoriented, right? Kind of the scalable solution for that business in the long term is for India to become an alternate export hub, right? And I think that there's legs for that, given that China plus one is now kind of beginning to play out, and people have a lot of people appear to have either anti-dumping duties with China, or basically want to curb the amount they import from China. So that requires a whole turnaround in positioning, which we're focused on. But again, it's going to be a journey that takes time, because we have to get, we have to start ramping up on the export side, and it's not going to happen overnight. But it's a journey we're focused on. So let us go through that process first before we.
Okay. And so just one question. You had responded to Abhishek's question for electronics that you are looking at various opportunities there. But so what will be the model we are looking to do? Will it be, let's say, a more manufacturing based, where you are looking for technology based acquisitions?
So once we've got it finalized, we'll share it with you. I mean, I think kind of we're evaluating obviously right now. I don't want to comment on it till once we finalize, we'll share it with you.
Sure. Fine. That's all from my side, sir. Thank you.
Yeah.
Thank you so much. A reminder to all the participants, you may press star and 1 to ask a question. All right. So, ladies and gentlemen, as there are no further questions from the participants, I would now hand the conference over to the management for the closing comments. Over to you.
Yeah, no, I think from our perspective, we continue to be focused on the both in the 4 financial metrics in the core business, and on these TI2 efforts and ensuring that they are driven to success. And we continue to be very bullish both on what the initial green shoots we're beginning to see on the EV side and on some of the new growth businesses. So we're very encouraged and bullish overall. So I think that's it from my side.
Thank you so much, sir. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you. Thank you.
That's all.